Hello, everybody. Welcome to the third episode of Interconnected Voices, the audio product of the Interconnected newsletter written by me, your host, Kevin Xu. The Interconnected newsletter is the internet's only bilingual English-Chinese newsletter on the intersections of technology, business, money, geopolitics, and U.S.-Asia relations. New posts gets published every Thursday and Sunday. What you're hearing now is the recording of a monthly company-building webinar series that I host for founders and operators building developer-focused and commercial open-source startups. My guest today is Clint Smith, who is the Chief Legal Officer at Discord and was a Senior Executive at DataStax, MySQL, as well as an angel investor in many startups in this space. We talked about and shared tactical information and advice for founders on how to build a global company from day zero to serve global customers as the world becomes increasingly interconnected every single day. No, there's no investment advice in this episode or any episode of Interconnected Voices. Please do your own research and make your own investment decisions. For more audio product content, please go subscribe to the Interconnected YouTube channel as well as the newsletter on Interconnected.blog. If you have any feedback or suggestions, please do follow and interact with me directly on Twitter at KevinSXU. That is Kevin, S as in Sam, X as in Xerox, U as in umbrella, or on LinkedIn or Clubhouse, all with the same handle. All right, without further ado, here is my discussion with Clint Smith. Clint, once again, thank you so much for joining me today. And I'd love to open up maybe with some of your kind of biographical background so people get to know a little bit about you. How many years have you been spending working in enterprise technology, open source technology companies? And what was your path into this really wonderful world?
Yeah, thank you for having me. I've been looking forward to this because I'm a big fan of yours. We met through OSS Capital and supporting some commercial open source companies that were just getting off the ground. We worked together at Preset, the Apache Superset company that's doing great. And I also love the fact that you bring a global outlook. Your global newsletter, your recent trip to Mexico. I'm the son of a US diplomat. I was born in Spain and I've lived in South America, Europe, Australia, and I like bringing a global perspective to these discussions, and I know you do as well. So I think that's a bond we share here in Silicon Valley. My background, I was trained as a lawyer. And when I was sitting at a law firm as the lowest minion in Washington, D.C., this partner came out of government. Stuart Baker had been the general counsel of the National Security Agency. So a lot of encryption, a lot of surveillance, a lot of interesting issues. He came out of government to the law firm and he needed a helper. And I was the most junior person. But he brought me along and exposed me to all these fascinating tech clients. And I fell in love with product managers and I fell in love with engineers. And I thought the most interesting work on the planet was helping product managers and engineers think through the legal, regulatory, public policy aspects of getting their products built and getting their products into use. And since then, I've worked for really a series of technology companies that I was drawn to because they were interesting. The first was UUNet, the world's largest internet backbone. It's now part of Verizon Business. And it was building out internet backbone around the world. Then I was at Macromedia. You might remember Macromedia Dreamweaver. Macromedia Flash has finally died, but it played a lot of videos before it was killed. And we merged with Adobe. And then MySQL, maybe one of my favorite companies, and we'll talk about that. And then a payment startup, TrialPay, with Alex Rampell, who's now a partner at Andreessen Horowitz. And wonderful team, tough market, but we powered through and got to an acquisition by Visa. And then most recently, DataStax, open source, Discord communications platforms, all of them high growth with good people and products that were impacting the world.
Absolutely. So I actually didn't know you started your career in DC. So I obviously spent a bunch of years in DC prior to tech as well, working in the US government. And there's actually a lot of tangential connections between government and where technology came from, Silicon Valley, open source technology. So maybe another session we can do another day to geek out about that. And I want to jump into our first discussion item. Both of us have really strong global perspectives. I think one of the things that I'm seeing a lot with early stage developer focused companies and or open source companies is that they're getting users from around the world almost day one. And it also probably competing with similar projects or products from other parts or regions of the world from day one, even when they're a super tiny company. And I'd love to hear from your perspective, how do you think through global product positioning in this day and age to help young startups think through this new situation, which is full of amazing opportunities, but certainly a bunch of challenges too?
Yeah, I'll use two examples from my career of MySQL, the open source database, and TrialPay, an alternative payments platform. And so I think if you're going to divide startups, some of them are attacking a well-known space, and the product category is well-known, and they have some new twist to it. So that was MySQL. There have been relational databases with DB2 and Oracle and Sybase. There was no shortage of relational databases, but this one was open source and ran on Linux, and that was our differentiator. And then with TrialPay, we were a new way of paying for things. So instead of paying by PayPal or credit card, the user would take an action. You might watch a 20-second video to earn coins for an online game, or you might sign up for a magazine subscription to get 2 free movie tickets from Fandango. But it was a new alternative payments approach where your action, resulted in a payment, but it had never been used before, and a totally different approach to the market when merchants didn't know that they needed to provide your method of payment to their users. And so I think in terms of going to market, if you're the MySQL and you're attacking the relational database market, the incumbents have huge advantages. They have contracts with every company in the world. They have robust ecosystems of partners and tooling, and they have people who've built their careers around being an Oracle DBA or a SQL Server DBA. And it's tough to break into that market, but you really need to narrow in on how exactly am I different from the 18 relational databases that are already out there. And we focused on open source, and we focused on the fact that we were part of the Linux distros. I think the real story of MySQL's success was not that it's a remarkably profound database. A lot of better databases probably. It's the fact that it was simple to use and it was bundled with Linux, and it reached people through that channel. On TrialPay, what we found was we either had to find merchants who had a high margin product that they were willing to experiment with our new way of purchasing, or our more successful one was to offer credit card processing and PayPal processing at cost, and then put our alternative payments as a third or fourth option. And so we could go head to head with the Braintrees and other credit card processors and say, look, we'll do it if they want to pay by credit card, but we're going to actually open up the opportunity for you, merchant, by having this alternative payment for people who don't have credit cards or who have maxed out credit cards. And so we had to latch onto something they knew, which was credit card processing, and tag our innovative payment solution onto it. But those are challenges you face, and it's not easy either way, whether you're attacking an established market like MySQL did, or whether you're inventing a new market of offer-based payments or action-based payments the way TrialPay did. It's a challenge either way.
So would you say kind of from those experiences and then looking at today's environment where there are more and more of these platforms being built, right? Like back in MySQL, like Linux was a determinant factor, I guess, right, to MySQL's success in a lot of ways. Linux is obviously still everywhere right now. And in the cloud world, we have Kubernetes everywhere for the container orchestration side. So these sort of like platforms that are of global reach are forming and being consolidated. Would you say for a new startup to think about their global reach, they should think about the strategic platform in which they have to bundle themselves with?
Absolutely. Ride the wave, I say. And maybe your wave is, serverless architectures, or maybe your wave is multi-cloud and Kubernetes. But yes, you need something that will carry you. And you'll find that it actually touches every part of the organization, from recruiting. Like your recruiting pitch is going to be, hey, I am part of this wave. And your search engine optimization is going to be those keywords relating to your wave. And your VC pitch is going to be, I'm riding this wave to 100 million in ARR. So you got to pick the right wave, right? I hope the wave you picked wasn't Mesosphere. 5 years ago. And so pick your wave wisely, but yes, you have to, because no startup can make it on its own energy. You need the energy of a big wave.
I see. Kind of a different side to this conversation is that a lot of startups in our world, whether it's enterprise tech or open source or developer focused products, by definition, most of the founding teams are very technical folks, right? Which makes a lot of sense. They kind of have to be to be able to create something new in the technology sphere. And there is this often, I would say, glossed over assumption that is almost wishful thinking in some sense, that if you build the better technology or the better product, you're going to have this wonderfully nice motion, product-led growth, almost like if we build it, they will come. Right. And I think there's a lot of hard truth to that assumption. And I'd love to hear from your experience. If you build it, will they come, or what actually ends up happening?
Yeah. And then, in open source discussions, there's often, will there ever be another Red Hat? And with product-led growth, I think we ought to be asking, like, will there be another Atlassian, or did they happen to hit something magic with their product-led growth, which causes 100 VCs to come to startups and say, why don't you do what Atlassian did and generate product-led growth, without sales and without sales engineers, and it's extremely hard to do. So I'll tell you a fact pattern I see, which is an open source project is solving a real need in the world. It may not be a massively successful project, but it's a project that has traction, that has people who are following and contributing. And the founders of that project, all I need to do is turn my project into a SaaS product, and people will discover it, hand me their credit card, I'll charge them X dollars per month on their credit card, and all of a sudden, I'll have a $10 million ARR SaaS business. And that almost never works out. And I feel like there's this expectation that you're going to take your open source project and turn it into a SaaS machine, and it's extremely hard work. So there are a couple things to do along the way. One is to invest in sales engineers, invest in customer success, and get 20, 30, 40 enterprise customers using an on-prem version of your open source project. And you are going to learn so much from that. You're probably going to build a better product-led growth machine after actually having launched your open source project as an offering within a bunch of companies that will pay you. So I often see the founders at the angel or seed stage thinking they're going to go directly to this SaaS model, but then they pause and they say, actually, I need to understand how an Uber or Roadblocks or a Slack is going to use my open source project within their company. I'm going to charge them $50,000 to create a center of excellence around my open source project within their company. I'm going to see how their engineers use it. I'm going to understand the tooling and the environment, and go do a bunch of those. One, they generate cash flow, right? It's very easy for one of these companies to cut you a check for $50,000. And second, the learnings are immense. And then you can step back from that after launching 20 or 30 of these customers. You can step back and say, is my better model the self-managed, self-hosted enterprise sale? Or now I know enough to turn this down into an atomic, pay by the credit card SaaS model that will have wide adoption. But jumping immediately to this product-led growth and sales on a credit card of a SaaS product is harder to do than you'd expect. But the VCs ask you to do it, and you're going to face a lot of pressure to do it that way. But it's not easy when you don't know exactly what people will pay for and how to get to them.
Right. And would you say this pressure or this kind of bias from the investor community, generally speaking, we're generalizing, not everybody believes this, but I would say the majority of venture investors do believe this, is that the SaaS model or the SaaS kind of revenue quality is better. And, what you're talking about with really going in depth with an Uber or Roblox and creating the center of excellence, what ends up happening on the tactical level is you have to deliver a lot of training, right? You probably have some like support level or agreement that is just them calling you when they have problems, kind of a revenue, right? Which is like old school Red Hat and not very SaaSy, not very subscription based. And that's why people kind of poo-poo it. But from your experience, that is almost like a rite of passage or the necessary step you need to go through for a young company to really know how to provide a good SaaS experience. Am I getting that right?
I would say don't rule it out as an excellent path to get learnings primarily, get cash flow, which helps, and get logos that will give you prominence for both market penetration and your next fundraise. So I think Martin Casado at A16Z has written well about this in terms of the value of doing services early on and how much you actually learn from those services and then can build into the product going forward. And so yes, you might face some resistance by doing services, doing proofs of the concept, standing up a self-managed implementation of your open source software. But a lot of learnings come from that. And it's much better than building a SaaS platform that doesn't attract any users.
Right. Or that you don't even know which part of the SaaS you are SaaSing, right? Or like SaaS is like you're providing this really nice service, which means, quite frankly, you're taking away a lot of the operational headache from your customer to your own company, right? That's part of the experience. But oftentimes you don't actually know exactly what you're trying to operationalize and where the value is. Before we get into the next topic, I want to reset the room real quick for Clubhouse, but also for Zoom. We're discussing with Clint Smith here how to build a global company from day zero. Clint is currently the chief legal officer at Discord, a senior execs at DataStack and MySQL previously, among many other companies. The way this will work is that this current part with me and Clint is actually recorded for folks to listen to afterwards. If you have questions, we will start doing Q&A in about 20 or 30 minutes or so. If you're on Zoom listening to this, please type in your question in the Q&A panel. If you're in Clubhouse listening to this, please raise your hand and I will bring you up to the Clubhouse room. Now, I know you have a more contrarian view or a more unique view towards partnership, which I'd love to talk about a little bit. A lot of companies in the early stages, this is probably like 0 to 2 years old, kind of maybe shun partnership discussion or don't even want to think about it. What's your view on how early stage companies should think about and or prioritize partnership discussions or conversations?
Yeah, I've been in rooms where an investor will tell a founder, CEO, don't spend a minute on partnerships until you understand who you were building this product for and have a repeatable sales model. And when you have a repeatable sales model to a known persona, then we can talk about partnerships. I think that's fundamentally wrong. So as a founder, CEO, when I sit with you, from the very earliest days, I want us mapping a landscape of partnerships. It doesn't mean necessarily that you're going to spend time. Your time is super valuable. You're not going to spend time with every one of those possible partnerships. But you want to be thinking about a taxonomy of partnerships or a map of partnerships and understand what types of partnerships will be available to you as your company grows. Which are the ones that are going to accelerate your growth? Which are the ones that could lead to an acquisition offer? Which are the ones that can lead to technology adoption accelerating? And which are the ones that are a complete waste of time? But you need to be mapping out the potential partnerships and deciding which are the ones that you will strictly ignore, which are the ones that you'll allocate a small amount of time to, which are the ones that you'll aggressively pursue. And I'll cover a couple of categories. One is really for any startup. I think there are probably 3 to 5 larger companies that will have a big impact on your fate. They may crush you by adding a small feature that completely destroys your market opportunity. They may make you a billionaire by acquiring you. They may partner with you and put you on a price list and bring you into accounts that you could never reach on your own. But you need to think about of the giant companies that are working with the types of customers you're trying to reach. What kind of relationship could you have with them and who are they? And you need to get on their radar early and you need to build relationships as high in those organizations as you can early. So that's the process of saying, okay, there are 3 to 5 companies that are on the landscape that I'm working in that really matter. They could crush me, they could buy me, They could bring me to market. They could shut me out of markets. And you need to have a strategy for those 3 to 5 companies, almost an account plan, like an enterprise rep would have. Then you got to look at the adjacent technology. So a data stack, everywhere Apache Cassandra is, Apache Kafka is, or everywhere that's using Cassandra as a data store is doing, Spark Analytics. So you need to say, what technology is sitting right next to mine within the target accounts or the target use cases? And you better find a way to work with those people, because you want to accelerate your momentum by being associated with things that work perfectly with your technology. And you should find that those partners are very receptive to you, right? So you and I worked with Max at Preset with Apache Superset. Well, Apache Superset works, really well with the Druid database from the folks at Imply. Apache Superset works really well with the products from Dremium. And so those adjacent companies are riding the same wave, reaching, the same customers, solving similar problems. You should work together and you'll have great synergies. And then sometimes you say, okay, there are certain markets that are great for me that I can never get to alone. And maybe it's government, or maybe it's financial services, or maybe it's a whole country like Japan. You might decide that they're great market opportunities that you will never capture alone. And somewhere on your roadmap, you're going to have to say, I need a government resale partner. I need one large partner in Japan who can just own that market for me. I want, education customers, but can't deal with them. I need someone who has credibility in that space. So then you're deciding when in your journey you partner with those companies that can penetrate a market that you can never penetrate alone. So anyway, I'm passionate about this because it may not take a lot of your time on a week-to-week basis, but I think it's essential as a founder CEO that you have a partner roadmap, a partner strategy that is a multi-year strategy and covers the different types of partners that can accelerate your growth, but that can also hold you back.
Very interesting. Would you say within a company's first 2 year, like just assuming there's some companies out there that are listening that are between the age of 0 and 2, you're going to have one of these, executive retreats or whatnot with your team or your advisors like Clint, if you're lucky enough to have them, or other investors, that there should actually be an agenda item on your discussion list, right? Among other topics. Be like, we should spend like half a day or a day, just map it out and we'll put it in the back somewhere, but this is like in our head now, right? So as we progress and start to really dive in on some other stuff, and we might forget that we can think about this from time to time in a more strategic way.
Absolutely. This is a perfect topic for a strategy offsite. It's a perfect topic for having an advisor help you for 90 days. And one of the benefits I didn't talk about, which is one of the most powerful ones, because we all know that our time management is critical, is it gives you a plan for what meetings you don't take. Like there are a lot of situations where system integrators want to come talk to you because there are teams at Accenture and there are teams at Booz Allen Hamilton who just need to kind of scour the planet for tech trends, and they're in the labs function and they love to just come and spend a day with you and understand your technology and where it fits in all the different architectures that are evolving. Complete waste of time. Like send them a white paper from the website and never meet with them because they never actually generate revenue. It's very different if it's like, hey, we are the automotive group Accenture and we're doing manufacturing optimization and all these things that could use your software in the auto industry at these 6 manufacturing sites where we have consultants. Then you take that meeting, right? Because if manufacturing is a good vertical for you and they're actually on site doing projects that are relevant to you, you take that meeting, but you don't take the one from the labs. But yeah, part of the benefit of that map is turning down a lot of partner meetings.
Especially if you have a little bit of traction and you got some press and you maybe raised a good round or you announced it, you're going to get all kinds of people trying to basically take your time away. Yeah, no, that's a really good call. I want to kind of zoom out a little bit more to some of maybe the more operational stuff even, because you've just had so much hands-on experience running the operations, the HR, the finance, the legal, and obviously the strategy and product of these companies. And one thing I know is top of mind for so many people in the software space, especially young companies, that, oh, we're going to build this amazing distributed team, right? We're all going to work from home, even though currently like me and Clint are, I don't know, maybe 10 miles away from each other. We're still in our respective room doing this thing. But I do think that presents some very challenging, I guess, scenarios going ahead for young companies, right? Even big companies have challenged organizing their workforce from around the globe. How do you think through kind of the foundational aspect of setting yourself up right? If you're like a company that's like less than 10 people right now, a couple of people in Australia, maybe a few people in SF, and like a couple of people in Berlin, very typical makeup. How do you make sure they're thinking about this to set up to succeed themselves in the right way?
So I start with strong conviction that talent is evenly distributed across our species, but capital and purchasing power isn't. And so as a startup founder, you have to take that into account, which is most of your revenue is going to come from OECD countries, rich countries that spend a lot of money on startup products. But your talent is actually evenly distributed across any place that they're humans and a network. And so I like to think broadly on the human capital side. And it was very motivating at MySQL, which really was one of the first fully distributed companies, to see the talent that would join our company from the MySQL community largely, which existed all over the world. And we had colleagues in New Zealand and South Africa and Bulgaria, and the power of being able to hire anywhere is really a great advantage. Now it creates a pain, right, when it comes to giving stock options or paying employment taxes and the like, but that pain is worth it. But you can't lose sight of the fact that your revenue is going to come from a small number of countries. And so when you're hiring in marketing, when you're hiring in customer success, when you want analyst relations to talk to Gartner and Forrester, you have to be in the market where your customers and the money is going to be. And so that's a tension I see, where you can hire support engineers and software engineers and database engineers all over the world. But when it comes to sales and marketing and the go-to-market function, you're likely going to be in the major markets where the money is, because people need to have that expertise.
I see. Would you say from just like a general management perspective, even all these like taxes and labor stuff and headache that it comes with hiring someone who might happen to live in Iceland, for example, right? When you're like a Delaware C Corp, are these all basically solve the problem at the end of the day? It's just a bit of a pain in the ass, and it's like kind of the right thing as far as company hygiene is concerned to get it right from like pretty early in the beginning and not have to think about it? Or how do you think about that?
So you start from first principles, which is if there's a talented human who can accelerate your company's journey, get them on board, and you can figure out the taxes and the stock options and the employment benefits. With the push to more distributed teams, there are all sorts of service providers popping up today that didn't exist when we were at MySQL trying to figure this stuff out manually. And so it is getting much easier to give stock to people in different countries and to make sure you're complying with the right tax withholdings in different countries. So you find service providers that will get you there, but you never miss out on getting a great human to join your company and advance your prospects.
100%. So I have two more very tactical questions for you, which is part of our MO, right? To be very tactical, something you can think about tomorrow, and then we'll open up to Q&A. One of them is about compensation philosophy, specifically maybe executive compensation. It won't be that long before most startups have to hire a VP of something, VP of marketing, VP of sales, and then a lot of things cascade when that door opens. How would you advise founders to think about compensation philosophy so they don't kind of screw it up for the long term?
Yeah. So first, the founding team needs to codify their company values and live those values and explain them to people. And I think that's one exercise before you get to compensation. But then, the second exercise, before you start hiring your first VP of something or head of something, you as the founder CEO should codify your company's compensation philosophy so that when new people join, they have an understanding of your approach. It can evolve a bit year to year, but I think these things are fairly fundamental. So at TrialPay, part of our compensation philosophy was we're not inspired by people who are motivated by cash. Like, we want to build a great company. We want to have stock in a company that is meaningful. But if you're the type of person who's arguing for another $5,000 of salary, that's going to be motivating to us. You're not in sync with us. And so we wrote down rules like that. But we also wrote down rules like, if one of our employees comes up against a really tough personal situation, it's all hands on deck. So when we had, an employee with a sick child, like, we went above and beyond to keep that employee taken care of, supported with meals, with paychecks, with extended leave, with continued vesting. Like, those things are so tough on the family that if it happens to someone, you need to rally around them. And that was a concerted compensation philosophy that we wrote in. They're interesting questions. I'll often help a founder write in that in our equity, we should have a bias to product and engineering people who are building intellectual property that lives for many years. And we will give less stock and more cash to a sales or marketing person, which is generating shorter term rewards, right? A great marketing campaign generates leads that will close in 6 months, but a great software architect is designing something that could last for 5 to 7 years. So let's give equity to the architect. Let's give cash bonuses to the marketing person and a little less equity. But I think defining these points is very important. And I'll raise two that I think are very important from early days to have an opinion on. One is, when can employees sell stock? So now it's becoming more and more common for startup employees to sell stock, as early as probably Series B. And some companies say, we're going to make it hard for you to sell stock. We're going to put into our bylaws that you can only sell stock when the board of directors approves that. We're going to control when you get liquidity. It's our choice. That's fine. A lot of companies decide that's the right way to do it. Other companies, and this has been the case at Discord, the CEO believes that employees should have the right to sell vested shares, just like you would if you were at Google or Facebook. And we have an active market where employees with vested shares can sell them. But that's a philosophy, right? I'm going to give my people freedom to sell, as opposed to I'm going to decide when my people can sell. And you need to have a philosophy on that early and explain it to your board. A related point, this is very practical and narrow, but it's important, is what happens to options when someone leaves, right? And Pinterest, was an early leader on this, where if you left Pinterest, you got an extended window to exercise your options. And, in California, you get, I believe, 30 days, and most companies give you 90 days, and that's very stressful. Like, I'm leaving a company, do I buy my shares? Do I lose them? What happens? You should have a philosophy on this. Does everybody get stuck with the same narrow window? Does everybody get a year? Does everybody get 3 years? Do you want a formula where if you spend 2 years at my startup, when you leave, you have 2 years to exercise your shares? That's a very tactical point, but it's important to have a philosophy on that you can explain to people and that you can apply consistently rather than make it up when somebody leaves. So sitting down and writing your compensation philosophy, I think, is sort of maybe a month 12 job for the startup CEO as you're starting to hire, employees 8 through 20. That's a perfect time to say, I'm going to distill my philosophy and really talk about how I treat my people when it comes to matters of compensation.
And would you say this philosophy, when it is written down and vetted within the team or the board and everything, that it should be published and just transparent to all employees going into infinity? Or how do you think about the transparency of this?
Yeah, it probably comes back to your values, where if one of your values is being transparent, if this is GitLab, you're going to publish that document.
Right.
At a minimum, you want any hiring manager to know, this is how we feel about spot bonuses. This is how we feel about tenure bonuses. Like, what happens when you get to year 3? Do you get, a $10 Starbucks card, or do you get, a Tesla? Like, let's define these things. And so, definitely every people manager should know the compensation philosophy of the company. And hey, if you're all about transparency, everybody should know it.
Do you think a lot of companies do this? It definitely intuitively sounds like the right thing to do, right? Otherwise, you're just going to have very inconsistent applications or management of your people. Like, do you see that a lot of people in the company actually do spend time doing this? I feel like, what do you see?
Yeah, absolutely. This ends up being one of the values I add as an advisor is sitting with the founders and mapping out a compensation philosophy. And they know where they stand on these topics. The value is having someone, distill it into a few paragraphs that you can read. And then when you hire that VP of engineering from Twitter, she might come in and do her own thing on compensation, but if you bring her in and say, this is our philosophy, do you agree with it? Are there things you change? Then you keep alignment as you bring in new executives on how folks are compensated at your company. It again is a huge time saver, because when companies don't do this, then they'll end up reaching out to a board member, an advisor, a law firm, and say, you know what, I've got to fire Kevin, but what should we do about his stock option? If he exercises it now, he's going to have hella taxes to pay. What should I do? And then you're doing a one-off solution, as opposed to saying, when employees leave, this is our approach to the window for exercising options. And that was codified in our philosophy. You save yourself so much time if ahead of time you decide, what do you pay as severance when you fire someone, and how long do you give them to exercise their options, and when can someone give a spot bonus, and when can you do a signing bonus, and what happens if you pay a signing bonus and they quit 10 days later? Can you claw it back? All these questions are predictable questions, and if you can solve them up front, then you can just breathe and relax. When the situation happens, you're like, oh, of course, we paid a signing bonus and we never try to go get it back. It's on us. We made a bad hire. The person keeps the signing bonus. That's in our philosophy.
Yeah. And I think the other thing you just said just now ring true to me too, is just like, if you decide early on, we are like a equity versus cash kind of company, at least in the early beginning, the $5,000 negotiation could end up either wasting you a week or two with a candidate, which is frankly a really big cost, or it could just be one email, be like, all right, then never mind. Thanks for, talking to us. And then you move on, right? Which is huge for a startup that's like 10 people or less.
I worked with one CEO who said, I want people to design their own compensation. So, his principle was, I want to be able to go to a candidate and say, okay, your baseline offer is $100,000 and 0.2%. However, if you want to take less cash, here's the formula where you can have more equity. But if you want more cash, I'm going to peel back your equity using this formula. And what he wanted was, his philosophy was, I want the candidate to decide, their ratio of equity to cash based on their situation. Maybe their spouse makes a ton of cash. Maybe they really need cash this year to pay off some debts, and they're all happy to take a stock grant next year. And then the same thing at bonus time, right? So rather than saying, Kevin, you had a great year, you earned a $20,000 bonus, it would be, Kevin, you had a great year. Would you rather have this many shares, or would you rather have this much cash? Like, you decide, because we want this to be optimized for where you are in March of 2021. That was pretty cool. It took a little bit of work, but it was really just exchange formulas, right? And it became personalized based on what the employee needed that year. And that's awesome, right? Because all of us, some years we want some cash, some years we believe in the stock and we're fine on cash, and we want to load up on the stock. And so that compensation philosophy was very much individualized. Treat each person in a manner that represents what they need from you that year. Pretty cool. But that was in the philosophy.
Very interesting. One more tactical question, and I swear I'm going to open this for a Q&A before we let you go. Should a company file a patent or think about filing patents early on? You alluded to this too, like rewarding software engineers and architects, right, with creating patents with more equity. But a lot of people have this question, especially in the open source world as well.
I know. I have, confession to make as a citizen of the world. I hate software patents. I hate the whole regime that has arisen around patent litigation and patent settlements and patent cross licenses. So as a citizen of the world, I hate software patents. As an angel investor, a seed investor, an advisor to startups, there can be great value in having a small investment in patenting your core technology. It can be helpful when you fundraise to show that you have something that the U.S. Patent Office has recognized as innovative. It can be helpful when you try to sell the company, and we're coming up with what valuation should we pay for this the seed stage startup. If you have a couple patents that can only help in the evaluation analysis. So I definitely think having a massive patent program doesn't make any sense, but having a core patent application on your fundamental technology is very useful. And there's an interesting technique you can do, which is you can file one initial application and then do spin-offs relating to more discrete technology pieces. So if you decide that actually patents are important to you, you can take that one foundational patent application and the precedent date of that application, and you can do branches off of it. And you could end up with 6 or 10 patents if you decide that's really important to you. So almost every company that does an IPO in their S1, they'll say, we have 6 issued patents and 14 pending patents, and it's some imprimatur that you've done an amount of innovation that's protectable. And I think it helps in fundraising, and I think it helps when you sell the company. I don't think it matters to customers, and I don't think it matters to market acceptance.
Hope you found this discussion with Clint on building a global company from day zero useful. For more audio content, please go subscribe to the Interconnected YouTube channel, as well as the newsletter on Interconnected.blog. If you have any feedback, comments, or questions, please follow and interact with me directly on Twitter at KevinSXU. That is Kevin, S as in Sam, X as in Xerox, U as in umbrella, or on LinkedIn or Clubhouse, all with the same handle. Stay tuned for the next episode of Interconnected Voices.